Good morning everyone and welcome to another RF Crypto video. Today's markets, they haven't moved much. They've only moved by about 0.5%. The global crypto market cap is still standing at about 950 billion. It is inching closer to the $1 trillion mark. We saw last week that the prices of the Bitcoin and Ethereum were below the $20,000 and the $1,000 level respectively. The rest of the market are moving in a similar manner, with not so much of a change. The changes are minimal. 1.6% for XRP and 1% for Solana, for example, aren't much of a change in the crypto market. It's a volatile space. It's a space where there is no regulation. It's considered risky. So changes like these aren't considered to be grand or significant. Dogecoin has gone up by 8%, which is quite significant. However, we shouldn't read much into it because it is still considered a meme coin, and these rallies could be due to speculation or people just wanting to pump the coin since it is still a meme coin. And we can see this because Dogecoin is up by 8% and Shiba Inu, which is another meme coin, is down by 2%. So there is some disparity here and we shouldn't put our minds to it and analyze it too much because there will be a correction eventually. Looking at the price of Bitcoin, we see that since the 19th of June, which is about 8 days ago, the prices have been trading between the $19,300 support level and the $21,500 resistance level. And we can see here that since the 24th of June, it has been trading at the resistance level and it has been flirting with this line. We see that the bulls are trying to buy up and push the price of Bitcoin above the $21,500 level towards the new $23,000 level. However, the bears get in and quickly push the prices down. So we see here that it did break the $21,500 level on 2 or 3 occasions. However, it was quickly pushed back. This is a good sign for the market because it's showing resilience and it's showing that there is upward pressure on the price. If you can see this trend, it is going upwards. And I think that if it significantly breaks the $21,500 level, it will shoot up to 23,000. But we'll have to see. It is trading quite laterally. The fear is still quite high, so people are holding back and seeing where best to place their money. So on some news, Grayscale's Bitcoin Trust GBTC discount narrows with EFT decision on the horizon. The Grayscale Bitcoin Trust, which is often referred to by its stock trading symbol GBTC, is the type of investment vehicle that allows US investors to gain exposure to price movements of Bitcoin without actually investing in the cryptocurrency. Grayscale, who owns this trust, has applied to convert the GBTC into an ETF, and they want to push for a spot ETF. And now, with analysts sort of honing in on this news, according to the market logic, the GBTC would trade at par with the underlying Bitcoin price in the fund if the conversion goes forward. And in other words, the discount would evaporate and the price of GBTC and the price of Bitcoin would become sort of the same. And lately, that discount has been narrowing, which is pointing to the sign that approval is on the horizon. So Pablo Jodar, financial products manager at Storm Partners, has said that the stock price is coming closer to the net asset value of the underlying assets, meaning that the market could have turned more positive on Bitcoin. And some analysts are also attributing the discount to people betting on the spot ETF conversion approval. And we know that Grayscale has been wanting to have a spot ETF approved. It has futures ETFs, but it wants to convert it into a spot ETF. And up to now, the SEC has said no. It has declined every single request by Grayscale to create a spot ETF. But as time goes on, I think that it is getting closer to being approved due to the fact that there is a lot of lobbying going on and a lot of public perception has been swayed in terms of becoming more pro a spot ETF approval. And a couple of months ago, a futures ETF was approved using a 1933 law, which before it was deemed to be not offering enough protections for investors in terms of Bitcoin products. And with that law now going forward, they can apply for a spot ETF and get it approved. And this narrowing of the discount indicates that a spot ETF approval is on the horizon, and a lot of analysts are predicting that a spot Bitcoin ETF will be approved still in 2022. Investors pile into short Bitcoin ETF betting on prices to fall. So investors have piled into a recently launched Bitcoin ETF that's designed to profit from Bitcoin's price decline. Up to now, all of the ETFs are betting on the price of Bitcoin to increase. However, this specific ETF is a short one, which means that if you invest money in this ETF and the price of Bitcoin goes down, then you profit. And people have been investing in this counterintuitive sort of ETF to the point where the vehicle is now the second largest Bitcoin focused ETF in the US market, and this is just a few days after trading. It's raked an equivalent of almost 550 Bitcoin or $11 million at current prices. And this short ETF's strong performance just reflects this fragile state of the cryptocurrency market as traders weigh whether it is a good time to buy Bitcoin and how much further its price could fall. So if there's a lot of people buying such a ETF, betting that the prices will fall, there is still a lot of negative sentiment in the market and people are still betting that the price of Bitcoin is going to fall. It is said that the recession reality appears to be driving markets at the moment, and it doesn't seem to be improving because inflation doesn't seem to be taming down, making the current support in Bitcoin around 20,000 look vulnerable, meaning that the support level is currently $20,000, so the hard support level or the psychological support level, and this is now vulnerable in a sense that the prices might even go below $20,000 if it reaches there. Once it breaches 20,000 from up to down, it will go below that and maybe even go up to 16,000. Some people predict 12,000. But it's a waiting game. Hopefully there's no recession and the cryptocurrency markets can recover well. On other news, Goldman Sachs is leading investor group to buy Celsius assets. So this is a very big indicator that Celsius is about to go bankrupt. Goldman Sachs is looking to raise $2 billion from investors to buy up distressed assets from troubled crypto lender Celsius at potentially big discounts because now they're going to sell their assets for cheap. They are soliciting commitments from Web3 crypto funds and funds specializing in distressed assets and traditional financial institutions with ample cash in hand, which means that they're building a team to buy the assets from Celsius at a massive discount. Maybe they'll be able to reinvigorate and restart Celsius, make it profitable and make massive profits. Celsius had more than $8 billion lent out to clients and $12 billion in assets under management as of May this year, and it abruptly announced on June 12 that it would stop withdrawals from its platform, citing extreme market conditions. What this means is that the prices of Bitcoin fell a lot. Not only that, wrapped Ethereum, which was the main investment product that they used to lend out money to clients and to add liquidity to their platform, depegged from Ethereum, which means that Celsius did not have enough liquidity in its balance sheet to cover all the loans that it was giving out to clients, making it insolvent and illiquid. And the only option is to go into bankruptcy if there is no external help. And up to now, it seems like there has been no external help, so things don't seem so rosy. Citigroup even recommended Celsius to file for bankruptcy, and it all points to that. And hopefully Goldman Sachs can buy its assets. And look at this, they're looking to raise $2 billion and it had $12 billion in assets, which means that they're going to buy it at a massive discount. On some market news, Russia defaults on foreign debt for the first time since 1918. This is mainly due to tough Western sanctions designed to punish Moscow for the invasion or the special operation as they call it, and restrict its ability to pay overseas creditors. The country has cash, it has a lot of cash, but it's unable to pay its creditors because the sanctions have cut Russia out of the international payment systems, SWIFT, and the other ones such as BIC. And a deadline for an overdue $100 million interest payments expired on Sunday, and they weren't able to make the payment, which automatically means that Russia has defaulted on its payments. And the debt adds to Moscow's growing isolation from the global economy and could tarnish its reputation among financial investors in a way that potentially takes years to repair. Just look at Argentina, for example. It's defaulted on its debt, and up to now, it hasn't been able to recover. It has runaway inflation, even hyperinflation. The economy is suffering, and it hasn't managed to solve the problems. And this could happen to Russia. The only saving grace is that it has a lot of energy resources which it could sell and rake up the money to make up for these losses. And one example of that is that Russia has plenty of money. It made $100 billion from fuel exports alone in the war's first 100 days, so $1 billion a day. But sanctions imposed by the US and others have prevented it from accessing these currency reserves abroad, because Russia's central bank has over $600 billion in foreign reserves. However, much of it is in computers of Western central banks in cities such as New York, London, and Frankfurt, which it can't access due to sanctions. Russia even tried to shift to servicing its outstanding debts, the $100 million, in rubles, its local currency. Unfortunately, none of the bonds have terms that will allow for the debts to be paid in rubles, and they should be made in dollars. June 27 was the limit. There is a grace period of 1 month. The actual expiry date was on May 27, and the grace period ended today. And they have not paid their debt, which means that they have defaulted. And the ruble has tumbled, and the markets in Russia will feel the brunt tomorrow. The big question is that how will this default impact global markets? Treasury Secretary Janet Yellen last month has said that the repercussions of a Russian debt default aren't big. It won't have much of an impact in global financial markets due to the fact that the country is already cut off and isolated from global capital markets due to sanctions, and as well as because of investor flight over the war. So a lot of investors have pulled out of Russia. They think that the country will put its geopolitical interests in front of investor interests. So they pulled money out of Russia into other global markets. So I don't think, as Janet Yellen said, there will be a massive repercussion due to this default, because it's already sort of disconnected from the rest of the markets. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your friends and family. Invest wisely, and cheers.